Ladies and gentlemen, good morning. Welcome back to your number one stop for everything stocks all around the clock. We got a big trading session ahead today and of course this coming week. Lots of big plays out there. We're going to be talking about it, making sure that you guys get all the information you need. We're going to be talking about some of the three hottest stocks right now that are on everybody's radar, retail investors and institutional wide. Now, if you're new to the channel, if you're new to the show, this is Data Dispatch, making daily videos. Hit that subscribe button if you want to learn more information, and of course hit that like button. I really appreciate it. Of course, I'm not a financial advisor. Take everything I say with a grain of salt and do your own research. Make sure you got your notebook out. Make sure you got your notepad up, because there's lots of notes to take, especially what is going on with some of these stocks that we are going to be talking about. Now, number one, we got it on the screen right here, AMC at 836. This is where it closed on Friday. We'll see what happens with AMC. Lots of things have been happening in the news, and if you haven't been following AMC, it's basically been down about 80 to 90% of its valuation. So is this a buy the dip type of situation? Now with AMC, what has been happening? It went through that 1-for-10 reverse stock split. This meant that if you had 10 shares, now you got one. This already pissed off shareholders, and let's double down. Adam Aron, CEO, said, hey, we're actually going to be selling 40 million shares. And they raised $325 million of cash. Now the shareholders are sitting back wondering what you're doing this for, because they're the ones that are taking a beating. Some of the most loyal shareholders out there in terms of retail investors. However, AMC was facing bankruptcy. This analyst were saying this is going to be bankrupt basically by 2024, 25. Now they got cash on hand. They can work on refinancing. They can work on repaying some loans. So where does AMC sitting at right now? 836. You got some big box office hits. We got some movies that I still got to see. We got the Barbie movie. I don't know if I'm going to be seeing that one. We got Oppenheimer. I do want to see that. And you got one of the biggest movies that's going to be coming out. That's the Taylor Swift movie that is exclusively coming to AMC theaters. Now, these are going to be some large revenue box office movies, and we've already seen it with pre-ticket sales has smashed records. I repeat, records for AMC sales. Now, this could be a great catalyst, especially as everybody talks about the potential short squeeze. There's always that option there. You know, of course, it's very speculative. Probability, it really depends on the short interest, but where we're sitting at right now, especially big talks in the news about AMC, but what is going on is there the possibility of issuing dividends? Now, AMC has raised that $325 million through the issuance of those 40 million shares that have been executed and have been sold. So now that they get some cash on their hand, they can go back to the drawing board and saying, hey, how do we not mess this up, and how do we continue to do well for the future? Now, talking about that, people have said that now that they have basically covered or paid off the bonds debt covenants that have prevented from issuing dividends, those have all been paid off, and now AMC can issue dividends if they like to, if they want to. So that's the big question. Is AMC going to be issuing dividends? Of course, I don't have a true answer. We're going to have to hear from Adam Aron himself to see if that will be an option. However, where AMC is sitting at prices right now is looking pretty juicy, because if we take the actual pre-reverse split stock ratio, that's a lot of mumble jumble all up in one sentence. AMC is at 83 cents, 83.6 cents. Yes, you heard that right. Remember when AMC was at like a 50 bucks just not too long ago? It's lost nearly 90%, over 90% of its valuation. Of course, those percentages kind of do change with the dilution, with the reverse stock split that we have. AMC is trying to find its ground, but it's been holding at that $7 to $8. That's what we have seen. So it will hold basically this $8 support zone. That'll just be a matter of time. Now let's pull up the next stock that we do have to talk about. That is AI, ticker symbol C3.ai. We've talked about C3.ai. People have really criticized, speculated this company, and especially with what they are working on doing. Now, AI has a big stab in the AI industry, and just the trendiness of its ticker symbol does give it a lot of attention. It is a highly traded stock, and where we are sitting at $27.36, it'll be interesting because especially at about a $3.2 billion market cap, we see C3.ai sitting at this $27. Now, one thing, let's talk about C3.ai, is basically that we've seen a pullback of about 41%. So could this be a buy the dip situation, especially as it's remaining under a lot of pressure? Now, remember C3.ai released its Q1 revenue and its basically earnings of 72.4 million. People have been wondering, hey, why has the stock been coming down since this is 11% up year over year? However, this was actually substantially lower than the 25% growth C3.ai repeated in the previous year. So what we see with C3.ai, great to see revenue, they're making money. However, they're not growing as fast as they once were. Wall Street does not like this. Institutional investors do not like this if a company is not continuing to increase those growth potentials. Now, with that being said, especially Wall Street was looking for future guidance of 78 million, but the management gave guidance of C3.ai of 72 to 76.5 million, basically saying that, hey, we're not going to be as profitable as we once saw it, or as Wall Street once saw it. So with that being said, they are continuing to take a beating. We're seeing a pullback right here, like I said, down about 41%. C3.ai really does go for about 32 bucks, and especially here after that earning here in early September, now we're sitting in the 27. So where does C3.ai really find, especially if we do zoom out on C3.ai, not a lot of recent support in this area, but if we do look and really zoom out on the day charts, C3.ai has a lot of support kind of here in the 21s. Now, it'll be interesting to see what does happen with this. However, right now, I'm going to be keeping it on my watch list, especially with the remaining performance obligations that they have worth 335 million. That's down, and it'll be interesting to see, especially with its valuation that is still very expensive. And this has already been criticized a lot for C3.ai. Even though there's been a share pullback, it still remains valued at 11.2 times its actual sales. So if top line growth really here, just basically saying it isn't enough to justify that multiple. And if their guidance is lowering, and if their growth isn't as high as it once used to be, I don't think the worth of premium of $27. I'm going to tell you right now, I'm not spending $1 on C3.ai at $27.36, but it will be interesting to see. We'll reevaluate it if it does come down, and possibly comes down to even some more juicy buy the dip prices. Now, talking about the last stock we do have on the agenda today, that is PLTR, Palantir Technologies. Now, we talked about this on the show here and there. Where Palantir does sit is at 1533. Now, just a few moments ago, Palantir was sitting in the 20s. We had their revenue that came out, their earnings that came out, and Palantir came down here into the 15s. Now, what's great about Palantir is they are actually a profitable company. They're in profit, and also in their actual involvement into the artificial intelligence industry, they have many government agencies and government contracts. Now, this is great because these can be long contracts, but this brings reputation and credibility, and especially allows them to be more marketable, to expand to more of those private entities, which basically diversifies its client base. So talking about Palantir, is margins are expanding and its free cash flow is rising at an impressive rate. So PLTR is kind of doing the opposite of what C3.ai is doing right now. It's growing, its customer base is growing, and it's working to add more AI features, especially with the most recent platform that it came out with their AIP platform, adding more features for their actual subscribers. Now, one thing that we have seen, especially with PLTR, and why people have not been liking it, is because PLTR, what they're saying here is their sales growth is unimpressive and its valuation is too high. Well, I'll tell you one thing right now about AI stocks. This has been a major boom for 2023. Everything in the AI industry right now is very high in terms of its valuation and the premiums, because many investors are taking a bet and a kind of spear of confidence that it will rise its price and valuation in the future. Now, talking about that, and especially with Palantir, it'll be interesting to see because they do have a good stance in the AI arms race. You got to think all these companies are really competing with each other to try to be the highest or the best AI stock. So talking about that, especially Palantir still does trade at 58x forward adjusted earnings and 15x this year's sales. So Also talking about that, they do have many lawsuits on their hands. So even though Palantir is a stellar AI company, in my opinion, they do still have some skeletons in the closets, and they have some high valuations. So interesting to see here, especially with Palantir. We got a lot of things going on. However, these stocks are lower in price, and especially what we have seen is them all cool off. So are all these stocks in a decent buy the dip situation, especially since you've had AMC go down 90%. You got C3.ai that basically has pulled 40% back in the recent future, recent past, and you got Palantir that's went from 20% or $20 down to about $15. So lots of things going on. I'll catch you guys later. Take care and peace out.